Hello everyone, welcome back to my FB Live, the hour before midnight basic accounting. I'm Kong Chat. Alright, today let's explore about monetary and non-monetary items in accounting and why is it important to distinguish them. Yeah, okay. Now typically non-monetary items, they are actually those assets and liabilities appearing on the balance sheet that are not cash item. Which are not, in other words, is not readily converted into cash. Okay, those are considered non-monetary items. And generally, non-monetary items include fixed assets, such as property, plant, and equipment, as well as intangible assets, such as goodwill, patent, and trademark. Yeah. So whereas for monetary items, they usually have a fixed exchange value. Example, the monetary assets are such as a cash, accounts receivable, or monetary liabilities such as accounts payable. This is considered monetary. Yeah. So when you're holding a monetary assets, all right, when the prices are rising, this will normally result in a loss of purchasing power because of the real value of currency is falling. Yeah. Whereas for non-monetary items, this will not be affected by the time value of money. Okay, right. Thus, the term monetary can actually be more tightly defined to be excluded any assets that cannot be readily converted into cash, such as long-term investment like bonds. All right, those are considered non-monetary items in the accounting. Okay, yeah. In accounting, in fact the primary determinant of whether something is considered monetary or non-monetary is typically based on liquidity. All right, liquidity refers to an assets or liabilities, the ability to actually be sold or paid quickly, and meaning they are easily converted into cash and assigned with a fixed value. And those are considered, when you have such item, then those is considered a monetary item in your accounting. Yeah. So one interesting question though is that what is prepaid expenses? Is it monetary or non-monetary? Yeah, prepaid expenses meaning that when you prepay something in advance. All right. So prepaid expenses may be considered either monetary or non-monetary. All right, because depending on the nature of the prepaid item that you paid for. Okay, prepayments can be such as deposits that you pay for. For example, you want to rent an office, you normally prepay something upfront. Rather, prepay something as a deposit. All right, has a deposit for security reason. Okay, those are prepayments as a deposit or advances payment for something that you may want to consider purchasing in future. Okay, so where you have such things in the under the prepaid category, these are considered monetary because when they are not in exchange for a quantity of future services. All right, so when you actually consider depending on the nature, so if prepaid expenses comprises a claim to a future services or a claim to a future product, okay, then that is non-monetary, which means that you pay in advance for a certain item that you purchase, then it's non-monetary. Whereas when you pay for something, or rather you pay as a deposit or just a down payment that you are not sure whether you want to purchase or not purchase in the future, that is considered monetary. Okay, yeah, so because when you have what they call fixed, when you actually paid something with your fixed money offset, a monetary, all right, for example, a deposit or advance payments that you made, they do not obtain a given quantity of future services. Okay, so that's why it's still considered a monetary for those instances. All right. But what about the other item in accounting? Usually you may see also deferred revenue. All right, is it a monetary item? Deferred revenue is typically is something that you have collected in advance from the customer, but you have to defer the revenue to future periods because the services or the product has not been the services have not been rendered or the product has not been delivered. You are deferring for a future period. So in such instances, does this what I call distinguish this as a monetary or non-monetary item for deferred revenue? Okay. It should be a non-monetary item, which is actually a liability, all right, because you receive cash but you cannot deliver. It's actually a liability to your company. So it's considered a non-monetary liability, primarily because liability is created out of a cash received from a customer for future service or product which is not yet delivered. Okay, so since the cash already received, the liability is no more a monetary item. Okay. Whereas for accounts payable, you have not paid certain things to your supplier. Those are monetary because you have not paid. All right, and the value that you convert into cash eventually, rather the cash will be paid out quite quickly for accounts payable. So those are monetary. Whereas for deferred revenue, although it's a liability, but it's not monetary. It's non-monetary for such instance. Okay, all right. So why is it important to distinguish or identify what is monetary, what is non-monetary for accounting purposes? Typically, there's actually two reasons. The first reason is the monetary items gains or loss, or rather, monetary items gains or lose purchasing power. Whereas for non-monetary items, it does not have such impact. Okay. And the other key important thing why you need to distinguish them is because under the translation method, different treatments are applied to these two type of items. Translation method typically means that when your business have a foreign currency transactions, all right, in your accounting, and foreign currency transaction has to be taken care of at the end of the reporting period for your company. So different treatment will be used where when this is a monetary or when it is a non-monetary item. How you translate the figure, okay? How you translate figure in your accounting purposes. For example, your reporting currency is Sing dollars and you're purchasing something in USD. All right, how do you treat this USD to your reporting currency in Sing dollars eventually? So whether you're using what type of exchange rate, that makes a difference of which item you're looking at, whether it's a non-monetary item or whether it's a monetary item. Okay, non-monetary items such as fixed asset or inventories must be translated into your reporting dollars at the same purchasing power at the point of transaction, meaning that the point when you purchase, that should be the rate that you use to translate for non-monetary items. All right, for example, your property or your equipment that you purchase for your company, those are translated at the point of purchase. Whereas for monetary items, your translation are done at the end of the reporting year annually. All right. For example, your cash, you may have a cash bank account which is in a foreign currency. You may have accounts receivable which is in a foreign currency. So how do you translate into your reporting numbers in your financial statements? Okay, so for these monetary items type, they are translated at the rate at the end of your reporting business year. Okay, let's say if your 31st December, they have been translated at 31st December. If your reporting year is 30th June, they have been translated at 30th June. Whereas non-monetary, they are translated at the point of the purchase and then no further translation being done for that. Whereas for monetary items, you translate as every year, depending on your reporting year. So every year you have to translate the foreign currency into that reporting year rate. Yeah, so that's why it's important to distinguish what is a non-monetary and monetary in your company's financial statements. Okay, so for accounting people who are more jargon based, basically they use a non-monetary are translated at a historical rate. Okay, whereas monetary, they are translated at current rate. So that's how they distinguish. When you tell them what is historical rate, they understand. They will tell them what is current rate, they will understand. Okay. Okay, hi William. Okay, happy birthday, William. Still in time, it's still not 12 a.m. yet, so Hope you have a wonderful day today. All right. Hi, Desmond. Thank you for watching. All right. Yeah. Okay, guys. So that's all I have for today, and thank you all for watching. And please continue with your lifelong learning because power is in your knowledge. All right. Goodbye and good night, everyone. Bye bye.